Hello, mic check 1 2. Can you hear me? Hello, hello. Can you hear me? At what decibels? What decibels are being permitted through your audio system? Hello, hello, hello. Mic check 1 2. Can you hear me? Hello, hello. Can you hear me? At what decibels? What decibels are being permitted through? Wait, how do I turn this off? Right, I know you can hear me. That's fantastic. So today, what I'm gonna do is I'm gonna outline on the Bitcoin chart using today's price action only some of the key things that I would point out in this here. So I'll show you a naked chart quickly. This is what price does look like on the 1 minute time frame, overall. So we have large accumulation of orders here, and then all those orders being swept, and this time distortion basically being like kind of a compression phase before expansion to the downside. So basically, yeah, I'm just gonna point out some of the key things that I see in this price action here. So what we'll start with are the things that are a constant. So every single day I will mark these levels on my chart, and these will be the things that I go to reference where price has been at what specific time. And also the market itself uses this in the same way that I do. So I use this level to see where price has gone since this time on this exact day, and the market references these precise exact levels that I'm about to speak about in its overall delivery in price action. Okay, so the first one is going to be midnight opening price in New York time, right? So I'll draw this out in New York time, and then I'll convert it to what's it called? Sorry, I'll convert it to this now, just so you can see. So this is in London time. If you look down here, the exact time for this candle's formation is 4 a.m. So 4 in the morning. That one specific 1 minute candlestick is what you're going to be using throughout the day. So this represents midnight opening price, okay, and it's obviously 12 a.m. in New York. You know that says New York because you're listening to me, right? I hope you're listening to me anyway. So okay, so that's midnight opening price. Oh, sorry, does that say 10 a.m.? I did in fact make a mistake, so I hope that you're listening to me because you would already know. Oh, it says here midnight opening price anyway. So okay, so 12 a.m. in New York, and then it's 4 a.m. Oh my gosh, sorry, I can't type because for some reason I'm looking at both at the same time. So it's 4 a.m. in London. Okay, so this one exact level, the price uses this as a reference point throughout the day in all other future days. Like the price uses this level eternally. Like anytime price is next to this level, it will likely use it in some regard. Okay, so even on this day here, like despite price trading lower like all day because we've been in a sell program, right? Despite price trading lower all day, we still utilize this level. So it's not like it was any one specific 1 minute candlestick that formed and then price kept dropping, right? When I send this to the back, you'll be able to see that it was formed here, okay, this 4 a.m. in the UK, and then it formed a bullish order block inside of that, and then when the upswing of the order block got taken out, price never even needed to retrace back to this. So if you had shorted this area here on the context that price is still overall heavy, there are inefficiencies down here, sell side liquidity, this volume and buy. Like you could see why price might want to short anyway, right? So, but on this day, fair enough, price didn't give identify the next levels, right? So that's that. And then the next one is the next one is like a time window. It's called a macro. So it's basically a a box that represents the amount of time that's like it's basically a set period that you measure every single day, and the algorithm, the market itself, uses this level, and it basically determines future price action from this level here. So this one specifically is London Open Kill Zone. So I'm gonna write that on here as London Open Kill Zone. Now I want you to like trust everything that I've said, yeah, but then I also want you to like go into your own charts and like use this knowledge so that maybe not so much use the knowledge to trade, but like just basically try to identify in your own market price using these levels and then doing whatever else it wants to do. So you have, oh my gosh, why can't I just put it down there? Sorry, I'm really struggling. So you have London Open Kill Zone here. Now, what I do personally with this box is I look for the first presented fair value gap that was formed in that delivery, right? But usually you're gonna want to wait for the one that has like already taken like sell side or buy side, like sufficient liquidity. So like the market, as you can see, has already traded down here and taken out this low here, right? So, and as well, there's already confirmations inside of this wick. Like if you were to take a box on this wick and extend it forward, you can see all of this price action falls in that wick there. So like if you're using wick theory and the concept of taking sell side liquidity, then we've already done enough damage to then use any fair value gap that was formed in here. So on this day, I would use the very first presented fair value gap, but normally I would want to wait until something like this happens, where like the market would at least take, like say that it started here, like I would want to see it come up and take this high, right? I hope you understand. So basically my first presented fair value gap on this day is going to be this one here. And then if I send this to the back, and also this as well, sorry, my apologies, 1 second. You can see clearly, right, the market has used that exact fair value gap to, for one, project price higher, okay? See this candle in here, the low of the candle forms exactly, precisely at the low of the box. You know, this is a signature of the algorithm. Like, this isn't like someone buying some random fair value gap. Like, this fair value gap is what price uses to fucking move, you know? It's not just this one, it's everything that I'm pointing out in this video here. So, like, this is like my trading setup that I will use like every single day. So, like, this fair value gap here is very, very contextually important to like the time span of this box, and the fact that it's an inefficiency that was formed after taking a recent liquidity, recent orders in the market, you know. So it's important. In this case, this is being treated as an inversion fair value gap. So like price is bullish, and then it comes below it, and then it goes back to it, and then it trades lower. So this is the most perfect, beautiful inversion fair value gap. It's fucking mental. So this gap would normally be orange, but because it's part of this box, obviously, like, we'll just keep it green, yeah? But this is the London Open Kill Zone. So it's called LOX. London Open Kill Zone, first presented fair value gap. And on this exact fair value gap is being treated as an inversion. So the fact that it's inversion is so important, yeah, because like when price had first like formed it, like you might be thinking to like go long on this fair value gap. Like you can see in this is a very nice color. It's like a pistachio cream nut color. It's fucking lovely. But basically, this fair value gap here, the first presented fair value gap in this box, price used the gap to trade higher, right? Once targeting the low, second time targeting the midpoint, and a third time the high. So literally the low, the middle, and the high. It sends price higher, takes out this liquidity here, and also this high, just by a tiny amount, okay? And then price dumps lower, like obviously in this run up here where it takes this high, it's also taking the London Open Kill Zone high, okay, after the time frame had, like after the box had finished. So it's 5:30 a.m. UK time to 6 a.m. UK time, and it's like on the 1 minute time frame, okay? So like it forms a bullish fair value gap, prices being bullish, and then it creates this like wick theory idea, and then price short takes out the low here, and then after the low is taken, so price takes out the low, and then it retraces back into this exact fucking box here. You can't tell me that that's not the first fair value gap formed in this box, yeah, and then price did not just fucking use that higher and then trade lower than it, so it created inversion. And this inversion fair value gap is the first presented fair value gap of here, so that has so much significant importance that it's unfucking real. Like you like there's so much importance in that, it's crazy. So look at how, oh shit, sorry, my bad. So look at how price just dumps on that idea. That's how the algorithm works. That isn't random. That is exactly what the fuck I would want to see. That is, like, the fact that it's being treated as such perfect inversion, this sell side's just open. That's like an easy target. And then the next liquidity is like historicals from days ago. So like it makes sense to dump and take out the all of the orders from days ago, because they're just old stale orders now in the market. Do you get what I'm saying? So we're using this as an inversion and we're just dumping to fuck. So London Open Kill Zone is 5:30 a.m. to 6 a.m. Okay, and I think I've explained that pretty decently. And same with the midnight opening price here. So next thing, 1 second, I'm just gonna put so New York time, yeah, it's going to be it's 7, no, sorry, no, it's not. It's 1:30 a.m. to 2 a.m. Fuck's sake, oh my days. What am I doing? Okay, and then so therefore London, it is going to be, what does it say here, sorry? 5:30 till 6. Is that AM? Yeah, obviously. So what this is, yeah, look, it's literally called London Open Kill Zone. So this is when the traders and the big banks in Canary Wharf in London, and like all of the big financial investors of the UK, they're all trading at this time. Like this is the entry that they're getting. If they're trading Bitcoin, that is the fucking trade that they're taking. I don't care what the fuck anyone says. Like, who is he really gonna be awake? Is the rich guy really gonna be awake before 5:30 in the morning? and like on his fucking laptop, you know what I mean? He wants to at least chill, do a bit of yoga, you know what I'm saying? 5:30, okay, boom, boom, boom. What time did he actually take the trade? 6:45 on the dot. So do you see what I'm saying? Like, it's all an algorithm, bro. There was no, like, it's not that it happened at 6:47. You know what I mean? It's 6:45, okay? And he was watching everything that happened from 5:30. And that's all it needs to be. That's what the rich guy is going to do. That's what I'm trying to do. That's the way it's fucking done, all right? Like, you can go short on the basis of taking this liquidity, then fair enough, you're a fucking good trader, and that's a fantastic entry, okay? But this is also safe. This is somewhat more safe than that is, because you know exactly where you're going to put your stop loss, which is above there. You know what I'm saying? But this price could spike into this wick one more time. Like, okay, but anyway, so we're going to talk about the next thing now. So I'm going to go back over to New York time. So we're looking for 6:30 a.m. Just like midnight opening price, how this is a 1 minute candlestick. That doesn't look right. It just looks... I don't like lowercase letters, you know. So it's the candlestick that was formed on the 1 minute time frame. Like, it's mad that price uses this. It's fucking crazy. Like, it's because it also ties into like other stuff as well, but this is all you need to know, you know? Like, it's so overly simplified already that it's fucking ridiculous. Like, it's just literally like boxes on a chart at this point. It's so simplified, it's crazy, right? You just have to be able to interpret it, but it's so fucking... Like, this is a 1 minute candlestick, and it's midnight opening price of the markets in New York, okay? That's it. And then the London Open kill zone, obviously I've already explained that, right? So the next one, yeah, it's exactly the same as the midnight opening price being a 1 minute candlestick, right? So it's going to be 6:30 in the morning. So the midnight opening price is in the evening. This is just like 6.5 hours later or something like that. So this is I just call it like pre-market. I just call it like pre-market liquidity, yeah. And like basically the time for that is 6:30 a.m. in New York, and then it's what time is that in London? I'm pretty sure it's 11:30. Yeah, it is. In London, it's 11:30 a.m. because we're just like 5 hours ahead of them or something, or like 4 hours. I think it depends on the. Wait 1 sec. We'll just check this because I don't want to be wrong. Oh, it's actually 10:30. So the reason why is because we're currently in something called daylight saving hours, or daylight saving. It's like an American thing. It's kind of like how our clocks go back in the UK. They have this like daylight saving hours thing, and it impacts the time by 1 hour. So the times that I'm putting on here now, they are for non-daylight saving hour. Like, it's for daylight saving hours. Sorry, yeah, it's for daylight saving hours. But normally, you would just add an hour onto the London time. I hope I'm making myself concise enough. Maybe I say too much, and to be honest, because we've been shorting massively today, price hasn't even really had any retracements back into these levels, which today is probably not a great example to show this. But to be honest, what's happened here is the market's so heavy that it's not even giving a chance to go back into these levels. And maybe that's where the market's going to head next. But it's just fascinating that, like, it's used them to short from, and it just hasn't referenced them back at all, really. It's quite fucking mental. So the next ones that I'm going to put on are going to be 7 till 9. But this, to be honest, yeah, you're supposed to just use everything all together. That's how I use it. So I'm just going to really quickly just put everything on the chart, just so you can see it. So just like London has its London open kill zone, New York also has its New York open kill zone. Okay, but then if you know anything about futures, you'll know that regular trading hours starts at 9:30. So anything before 9:30 is electronic trading hours. So in the opening range, which is the first hour, or it might be 30 minutes, you know, but this here is what I was told to outline. This here is the equities open macro. And basically in this you're looking for a first presented fair value gap, just like London open kill zone. So to be honest, I would probably just use this one here. That is the first fair value gap in there. But at the same time, I wouldn't use this one. But I don't know, I'm not going to be like too picky, to be honest. Like, this is the gap that price had shown me. So this is like the actual first one. To be honest, sometimes you can be picky with it. Like, I mean, if you find something more significant than the first presented fair value gap, then use that instead. But this here is the equities open range, and the first presented fair value gap of that, so FVG, is gonna be, so this is 9:30 till 10:30. So after 31. So you have to look for the first presented fair value gap that's formed after the first minute of that session. So if it's like 9:30 and the fair value gap's like formed in those 3 candles, you can't use that. It has to be anything after this close. Okay. So this here is also an algorithmic reference point that price uses. So all of these are, like, fair enough that there's all of the writing, but these are basically what I use on a day-to-day basis to identify what price is doing and, like, you know, where it's been, where it's going. So I think this speaks about everything, to be honest. So midnight opening price, I use this every day. London open kill zone. Are you gonna need the timestamps? I can just click on it and it'll tell you the timestamps. Does it? Oh no, it doesn't. Wait one sec. So in London, oh, this is New York. I'll just show you them in New York first. So it's this time here, and it's this and this for London open kill zone, and then 6:30 a.m. and then London open, New York open kill zone. Sorry, 7 till 9, New York time, and then the equities open range in New York time is this till this. And then the first presented fair value gap is anything formed after the first minute of the range. And that goes for all of them. If you go for a first presented fair value gap in here, it'll probably give you like that. So to be honest, price has been a bit strange today, but I'll quickly like show you some examples of where prices utilize these levels with a lot more respect. Give me one sec, I'll show you. So I have to go down quite far. When I first started studying it, to be honest with you, when I first started studying it, oh no, it's even further. You can see like, to be honest, none of these examples are actually very good, but I can just use my data on here. One sec. So, oh no, never mind. I can't. Oh, why is it going off for? And then this formed, which is the 6:30 a.m. 1 minute candlestick, right? This red one here. Price traded higher than it into this London open kill zone's first presented fair value gap here. And then it traded back into here and started ranging inside of it until this was formed. And then once that was formed, price like sort of used it like this, and then used this level once more. So it's like they do form and price does use them, but it's very down to like the interpretation aspect. Like you can see how like price rallies off them here into this midnight opening price up there, and then look, this midnight opening price aligns perfectly at the low of this one, and look how strong that area was. Like, so it's crazy. Like the algorithm does use these. Look, there's also this London open kill zone here. This is like definitely the best. This is what I should have shown originally. So look, it forms at 1:35 from 1:30 to 2 in New York time, and then eventually it drops through it here. But look, it gets to the midnight opening price, wicks into it and bounces. So that's how you can see that there's algorithmic respect there. But how long has this video even been anyway? How long is it? 30 minutes. That's long enough. Yeah, these are the levels here. But let me just like quickly make, so 11 a.m. till 11 a.m. till 1 p.m. New York time, and then London time is going to be, oh shit, wait, no, sorry, that's the other way around.
game, innit?
It's good, like. And then for New York time zone, I just use 7 a.m. until 9 a.m. And then to be honest, there's also actually some other things that I could like go into there, coming down, hitting this one, going up and hitting that one, forming a new one inside of the midnight opening price here. And then it came down into this range, and then it hit this one, and then it just started consolidating once it hit all of this range down here. Like, it's crazy, like, literally, yeah. Like, I know it looks hectic, but it's just... Hello, can you hear me? Hello? Oh, yeah. Hello, can you hear me? Hello? Oh, yeah. So this is the 6:30 a.m. boxes, and to be honest, this works the same. You can also use it on the 1 minute chart. So, like, literally you can see up here, this is like some previous days. So it gave me all of these lows, and then it formed this one, and it took out those lows, and then look, it came into this one here, and then in the process of forming these lows. Like, it's just mad. Like this was formed here, it used it once there, right? And then this one was formed the next day there, and then it's using this one. And then this one was formed on the third day here, and then it cuts through those and goes a lot. It's mad, bro. And then this here is a different type of macro, this blue box, bro. But I'm just trying to prove to you, so the green ones are obviously the 6:30 a.m. 1 minute candlesticks, and the black ones are the midnight opening price, basically. So they're the levels that I use. And they're very quite accurate, to be honest. Like, it's mad. I'd be interested to see like how it looks on your charts and stuff. So I'll just quickly write the equities open range on here, and then I'll leave the video. So the equities open range is is this UTC? So it's 1:30 p.m. London to 2:30 p.m. And then for New York, it's 9:30 a.m. until 10:30 a.m. for New York. And like, this is what I use, this works for me, this is what the algorithm